Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. I'm especially delighted this time that we were able to get Lynette Zang back on, because we usually had a much longer spacing between interviews, and last time we were interrupted with some challenges that got us to be able to reschedule sooner than usual. So I'm delighted to have her back. But for another reason, I didn't know if I was going to make it this time, because I've been battling the flu for almost a week now, and I was just 12 hours away from having to go in for a chest x-ray for possible pneumonia till my fever broke yesterday. And so I apologize in advance if I have any coughing fits, but my wife has outfitted me with this lovely mug of herbal tea, so I'm well suited, I think, and hopefully I'll make it through. Been hanging in there. So Lynette,
I hope so too. Well, I hope you feel better, because I know it's still just a little bit dragging on with me forever.
Oh my gosh. Well, welcome here on Reluctant Preppers.
Happy to be here, as always, done again.
I noticed that you've got a wide variety of lovely food on the table in front of you, and that's really quite interesting, because I was going to ask you about your backyard garden, so maybe you want to tell us a little bit about that, because that's some of our viewer questions that we're going to get to.
Well, I have to tell you that this is probably one of my favorite times of the year, because all the fruit trees are budding out. So I have itty bitty, peaches now and berries, but these are still from the winter garden. So I've still got lots and lots of wonderful grapefruit. This one is actually not a very big one. It just happened to be handy when I was passing, so I grabbed it.
Oh,
but
wow.
I've got some nice big ones on my white marsh. I've still got my lettuces. I've got some broccolini and chard, and this gorgeous head of cauliflower.
Wow.
So you got lucky, because Megan asked me to bring her in some food. She's having a bunch of people for dinner tonight. So
Nice.
I brought her a whole bunch of stuff. But yeah, the gardens are doing really, really well. I love this time of year.
It's
Everything
funny.
just sort of seems to be exploding.
Well, you're a little ahead of the curve for most people in the U.S. With your location in Arizona. We've had an especially hard-hit winter in the Midwest. I know in Minnesota, where we used to live, and here in a little bit further east part of the Midwest, you mentioned the trees are budding out. We're getting to see, there's still trees there after the snow cover melts down. So that's where we're at.
But I'll tell you, this year, this was a very weird winter, because here in Arizona, it was mild up until like mid-February, which is typically, that's the start of our spring planting, is Valentine's Day. And so we actually had to postpone it for about 2 weeks. So we've been, crazy busy getting all the food in the ground and getting all the plantings. But I think that that's really because of the climate change issues and different things that are changing. I think that's why it's important to have an indoor grow space too. And I don't think we've taken any pictures of that, have we, Megan?
Yes,
The indoor.
I just tweeted one yesterday.
Oh, okay. So Megan tweeted it. So we're actually setting up the garage so we can, if something like this happens, we can get our starts out faster, but we could actually even fully grow in there.
Huh. Oh, that's really exciting. We've continued to plan that when we make a trip out to Arizona, we're going to have to visit you and get a firsthand. Maybe we'll do a interview right there for the first ever
Absolutely.
time. We've got a large number
And if it's in the summer, bring your bathing suit so you could go swimming with the fishes in the pond. Pond is so gorgeous.
That sounds exciting. I always dreamt of that when I was a kid, going swimming with the fishes. That's pretty cool.
Exactly.
We've got a lot of viewers' questions, Lynette. As always, when we open up the doors to ask for submissions of viewers' questions, they come pouring in, and some of them are related just to what we're talking about right here, and then we'll switch over more into the precious metals topic soon. But this one talks about, Brian Jenkins asks, I understand that buying something that they don't make anymore makes good sense. However, in a reset, would not the buying without debt, food-producing land be very important? When the fiat goes to nothing, you still have the land and likely some improvements like a well while waiting for gold to recover. Your thoughts on that?
Well, actually, you do need some land so that you can produce food, which becomes, in overall, the biggest issue. I don't really view this as a problem with land, but one of the challenges is on the property taxes, since you cannot put land on your back and move away. So you just have to make sure that you have the right amount of gold that you can convert into the fiat, and so that you can always pay your property taxes. The other part of that is all real estate, I guess I can't say all because I haven't looked at all of it, but most of the real estate right now, whether it's farmland, and especially farmland, there's a tremendous amount of bankruptcies that is happening in the middle part of the country around farmland. So, it's the property is coming down in terms of fiat. Okay. So I do think that that is a really good choice. I'm not buying a piece of property for that yet, but I am certainly utilizing the piece of property that I live on for that. And there's so many techniques where you can really create, like what I have is a food forest. So, we're still working on it, but you have the trees, and then you can grow things up the trees, and then you have like higher food bushes, like maybe, I don't know, rosemary or something like that. And then below that, you might have like eggplant. And then below that, you would have root vegetables like carrots or beets or something like that, so that you can grow a tremendous amount of food on a very small piece of land. And that's the choice that I've made, at least at this point. I don't know that that will be the only choice I'll ever make. I could certainly see buying some good farmland, but I think it'll be a whole lot cheaper waiting in the future. So you want to make sure your needs are taken care of now, but that might be something that I would consider during the reset. And understand that the reset is the fiat currency against gold. So now you have the land going down and you have gold going up. And history shows us that on average, 25 ounces of gold or the equivalent could buy like an entire city block, buildings and all, during the reset. So I personally prefer to, aside from making sure you have shelter, that you can produce your food on and all of that, my personal plan is to acquire those different things, key pieces of real estate rights and other income producing assets when they're cheap. They're not cheap now.
Yeah, you mentioned
you have to have a roof.
You mentioned people getting taxed off their land. We actually had a very close acquaintance who their family had had a lake home in the family for generations. It started out just as a humble cottage and that sort of thing, but it got so built up around there with other mega mansions being built around the lake that the township kept raising the prices. Eventually, they were taxed right out of there. They had to leave because they couldn't afford to just keep carrying that. So it is really important. One thing you mentioned also in passing was this demographic winter that's hitting the U.S. agricultural farmers, that sort of thing. We had Joel Salatin from Polyface Farms on, and he talked about, actually his daughter, I believe, runs the site. It's called eagerfarmer.com, and it's helping people who are interested in working the land connect with people who've got the land but don't have children who want to work it. So there may be a very low or even zero entry price opportunity for people to be able to get on some land and be able to grow food on it that would still allow them to bide their time waiting for the market valuations to right themselves, as you're talking about.
Exactly. You just have to be strategic about it. But I would like to point out that most likely, if that family that had that lake house had begun to accumulate gold at the time that they bought the lake house at the level, fundamental value of that ounce of gold to the property taxes, that they probably would have never been in that position, because the gold, if they locked it in early, I mean, that just, it moves in terms of fiat, but it just maintains its purchasing power. And that's what I saw in Chicago, Chicago has the fastest rising property taxes. And yet when I ran this exercise over a period of time, if you had bought, like, say, the gold Swiss francs or whatever, but fractional pieces of gold at the beginning of the cycle, and then converted it into fiat down the road when you needed to pay those property taxes again, your property taxes actually didn't go up. They actually went down because of what happened with gold. So that's really what the point going into the reset, because you've got to have, I mean, I've got property taxes. We all do. You know, it's a fact of life, and they will tax you more and more. So part of the strategy, especially around real estate, is to make sure that you have enough gold to cover, in terms of ounces, to cover those property taxes, no matter, frankly, how high they raise them in terms of fiat, because gold will keep pace with that and then some.
That's an interesting
point. There's a way to address it.
This is a related question. You may have addressed this partially, but I think there's more here. Ray H. asks, Lynette has spoken about exchanging some of her gold for other assets, property, etc. once gold reaches its high. I am downsizing, trying to reduce most responsibilities. What other choices are there if I'm not interested in the responsibilities of owning these assets?
Well, I think it depends on what the assets are. You know, so everybody's got different tools to work with. For example, I'm fortunate enough to have some really wonderful and very bright children that can help me manage them. However, I certainly know people that do not have those resources at all, in which case you're going to want more things that are more like passive income, like mineral rights, air rights, water rights, things like that, where it doesn't really have, you don't have any responsibility in it, but because you own those rights and companies have to pay if they want to utilize those different rights, you generate income, and it doesn't take anything for you to do that. So part of what we do is, on an individual basis, what are your goals? What do we need to accomplish? And what are the tools that you have to accomplish this, so that it's really geared toward you? What works for me may or may not work for you. It depends on your circumstance. I know I don't want to go out there and manage all that property, but I have younger adult children that they're at a different point in their lives, and yeah, they will.
Right. This is also related. Luke Thompson asked Ms. Zang, at what point should I convert my silver to gold and then take the gold and purchase land? So talking about at what point do you decide, yeah, that's when it's the right time to make the shift?
Well, you know, he was talking about the shift from silver to gold, and I think you need a combination of the two. So, you know, for me, silver is about barterability, and that's based upon your current cost of living and how long you're going to need to carry yourself. Generally speaking, I like about 10 years to carry, because nobody really knows how long it's going to take us to get to the full other side of this. But the gold is more for wealth preservation, and that takes us back to, you know, property taxes, being able to pay them is part of wealth preservation. Now, if you have a large enough position in silver, you can do that with the silver. The biggest challenge for me with silver is how bulky it is. It's just really bulky. I can carry a whole lot more wealth in a gold coin than I can in, you know, a room full of silver, or, you know, less than that. But it's the bulk that makes it not as practical for these other functions and buying, you know, the property. So I think you need to be diversified right along. I don't think it's, so if you've got like too much silver, I mean, again, it goes back to an individual thing, because you might not need to convert all of it. But I would look to get into that position now with the gold. if you're really super weighted in silver. But, I would say call and talk to one of our strategy specialists so we can look at what your specific circumstances are and how much silver you need and how much gold you need to support your personal goals.
Shannon,
does that make sense?
Yeah, I see what you mean. I mean, a lot of people have been tracking the gold-silver ratio and feeling that it's far out of a historical balance in the favor of silver being underpriced relative to gold at the moment. But that can change, so it's hard to know which way that's headed.
Well, I mean, it isn't necessarily hard to know that, because when you look at the historics, while gold and silver will track to a degree, when you get into the full-blown part of the reset, then gold, in terms of fiat, historically outperforms. So, the problem with looking at, this being out of whack is that you're really not looking at function then. You're looking at it in terms of fiat dollars, or it depends on where you are, but in this country, fiat dollars, and you're not going to convert your silver or gold into fiat dollars unless you need those dollars to perform a function like pay your property taxes. Because at that juncture, everybody knows that the fiat dollar is worthless. So that's why I say the silver for me is more about barterability. Going to the store and buying a loaf of bread or a pint of strawberries, which I would need to do either one. But, generally putting a gallon of gas in my car, things like that I look at all of it as function. What is it that I'm trying to accomplish? What is the best tool to accomplish that particular job? And that's how I build my portfolios. Not because the silver gold ratio is off or people think silver is going to rise faster than gold or is more undervalued. They're both undervalued. And they both have complete global use. But resets are accomplished against gold, not silver. Silver follows along with it to a degree. But at the end of the day, I did a whole video on this because people were questioning the ratio and all of that. And when you look at what has happened historically during hyperinflation, ultimately, gold will outperform silver because that's what they reset the currency against. That kind of makes it easy.
There's a related question about hyperinflation and a reset here from Shannon Phillips. She says, I'm very curious about what you think the government will do with all student debt when we move into hyperinflation.
Well, I think ultimately they're going to have to forgive it because, for one thing, it's not getting paid back. And for another thing, it's hampering people's ability to support the economy in other ways, like buying houses, etc. So I think ultimately, and look at who the government is guaranteeing it, which means that you and I are guaranteeing these student loans. I think they're probably going to be forgiven.
Wow.
They're going to have to be.
Well, it would be the first time we had the little people getting a bailout.
Always be wary of free gifts because typically they come with an awful lot of strings attached.
Believe me, I wasn't making light of that in that way, in that regards. You bet.
No, but you know what I'm saying is because, if the little person gets a bailout, it's because the bigger person's getting a bigger bailout. I got news for you.
And there's often strings attached anyway to the little person in terms of the loss of liberty or obligations of follow up that are going to come from that. So.
Right. And who's really doing the bailing out? Is it the government? No, it's the taxpayer. Government guarantee means that they are using your pocketbook to fund these different things that they're doing.
We've got some general questions about the current overall macroeconomic situation and some clues that will give us insight into what signals we might need to look for to see the beginnings of the reset. Greg Zoltan Botos says, Can you talk to us about the one-year bond inverting?
Ah, yeah, the 1-year bond. I mean, if you listen to Main Street media, they keep pretending that there has not been an inversion. I haven't really seen, I actually pulled that data up this morning. So I may not be as intelligent about it at this moment as I will be when I have a minute to dig deeper into it. But what I definitely do know, excuse me, is that the 2-year continues to be inverted to the 5-year, and that's been in place since December 4th. And now the 1-year is just a little bit less than the 10-year, but I didn't frankly have a chance to pull up and compare it to the 2-year and the 5-year. But I put it up on my screen because I'm going to look at that. Yeah, the bond market, when a shorter term yield, a yield is supposed to reflect the credit worthiness and the value of the money in the future. So when you're down at these low yields and going into negative yields, which is exactly what's going to happen during the next crisis in this country, I mean, it's already happening other places and has been for a long time. What that tells you is that the currency has to reset too. It doesn't have any value. And that's why we have these artificially low interest rates on top of this mountain of debt that they've been building. But a yield curve inversion tells you that a recession is on its way, which is why you have all of these IPOs and all of the unicorns that are rushing to market this year after waiting all those other years and really exaggerating their valuations to the market. Because this is it. We're in the end game. It's not when will the reset start. It is when will you know that it started. It started in 2008. That's when the old system was killed. And you know that because every single thing that they've done since has been pure experimentation. Let's throw this on the wall and see if it sticks. And even all of the trillions of experiments that they've thrown at the wall since 2008, once they try and cut back on them, what happens? The market goes, no, we need that drug. You can't take it away. So, I'm more thinking about what's probably coming up. What's that next step? And there's been a lot of talk about MMT, which is modern money theory, which basically, to be perfectly honest with you, it's the government having the ability to print money to fund all these different things like, free education, free medical, and there was one more. Free education, free medical. Can't remember the other one off the top of my head. But there was one more. And yet when you look at what the government's been doing, guess what? What's the difference? Seriously, what's the difference? So I think this is really interesting. I think accepting modern money theory is probably going to be the next step for the central banks. And quite frankly, all it is more of the same that hasn't worked in the last 9 years. All it's done is inflated the markets, but it hasn't solved anything, healed anything, reset anything. It's just everything is much worse, frankly. Debt levels are much higher. Derivative levels are much higher. Abuses in the system are much, much stronger. So I don't think they're going to have much choice. It's like the helicopter money that we talked about. But that's what they're going to have to do. They don't have any choice. And we've just seen it. Global central banks did a 180. Completely turned their position. We're raising rates. We're reducing our balance sheet, all in the effort to get ready for the next crisis. And they admit that openly. And so what they're headed toward is global negative rates. I mean, China's rates are a little bit higher, so they'll have a little bit. No, what are we talking about? They think that interest rates can control everything, and they can until they can't. But the whole point of interest rates is dropping them down to inspire more debt. Well, does debt really not matter? Because I think it does. And I don't think it matters if you're a government, corporation or an individual, the difference is in the pockets and the advantages that you have. So you and I, if we go into our printing presses like the government does, well, that's counterfeit. And reality is the government is counterfeiting real money, gold, when they print those fiat or they create those digits. So it's just that they have the ability to abuse their power and we don't. And then corporations, obviously, they benefit by that abuse because corporate profits are far more important than anything else, because that's who really matters in the system. And if you doubt what I'm saying, go back and look at what's happened since 2007 and 2008, and even way before that. So, I think we're going into negative interest rates without a doubt, and all they're going to do is print and print and print, because those are the only tools that they have until the system hyperinflates, and then they have to do the reset. That justifies the reset. They have to do the reset anyway, but that's what's going to justify the reset. And if you're scared enough, which is what they need you to be, you'll accept anything that they want to cram down our throats.
In the past, you talked to us about stress tests that several banks were within 4% or something of potentially failing or becoming systemic risk if the market moved against them, against their specific positions.
Right.
But recently we observed over the past quarter there was supposedly a meeting called by the White House with key representatives from Wall Street banks coming in, talking to the Treasury Secretary and so on. And then suddenly we saw this amazing reversal at the end of fourth quarter and the beginning of the best first quarter in history. Why can't the banks just keep playing that game? If they can actually, because you mentioned what can they do other than drop rates, that's central banks. But as far as banks actually directly participating in the market, just buying up the market, we've seen that in Japan, we've seen it in some other countries. Isn't that another lifeboat that can keep on getting reinflated for an extended period of time?
Well, I don't think it can be for the only reason why it works is because everybody agrees. Okay. And that is why it's so critical for the general public to not understand what's going on. Your work, my work, there are a number of other people's work out there is to lift that veil so that people could actually see what's happening. But they can do it. This is not really probably a satisfactory answer. They can do it until either they can't do it anymore, because even so, that debt has to be rolled over. It has to be reset, or it has to be defaulted on. And you have the LIBOR, you have that whole system that's coming to an end in just a little bit of time, 2021. That's not very far down the road. So no, they cannot do it forever. They can do it as long as the public continues to trust the system. And that trust and that confidence has been severely eroding. And look at the rise of populism. And that's why they're not going to be able to do it very much longer. Look at what just happened with Amazon, right? Trying to go into a borough of New York, and then even some government officials were against that and against the paying them to move there. Well, that's a populist movement. So what we're really seeing is that the tide is turning. And it appears to be, I can't guarantee this, but it appears to be that a 3% awareness of anything, whether it's digital currencies or it's the importance of gold or it's the confidence levels, that 3% threshold seems to be when patterns shift a lot, when more people become aware of it. And that's what's going to be the determining factor of how long they can keep this going, is that awareness. Having said that, it also can fall apart when keeping it together becomes too expensive. What would make it too expensive? Well, there you go. You've got your risk and you've got your reward. because right now all of the new debt that's coming into the system is not stimulating the economy. It's not. So it did at first, but it's like pushing on a string. So if something isn't working and all you're really doing is a lot more of the same thing, you may want different results, but you're not going to get those different results. You're just going to add a lot bigger burden on the taxpayer, because ultimately all of those debts have to be repaid, rolled over, or defaulted. What, am I missing another option?
I don't know. What does modern money theory have to say about that? It's just, they say it doesn't matter.
Yeah, actually, they say that if a government can print the money that they use to repay the debts, like the US, Japan, Europe, then the debts really don't matter, and that they should not worry so much about deficits, but really focus more on the public good, which is always the excuse that gets used. This is for the public, but then it really never is. So yeah, they don't think it matters. But what happens if they just keep printing and printing and printing? The currency loses more and more and more value. Mm-hmm. When things are easy, do they really? It's kind of like, I can sit here and I can tell you things, right? And I don't want to offend anybody, but maybe it'll go through here and go through there because it really didn't take any effort to get this information. But if you sit there and you do your own due diligence and go in and take your time and read all of this stuff, you're going to retain it better. You're going to understand it better. It's not just going to, so if something's too easy, it has less value. But if something really takes effort to learn, to understand, to create, it has more value.
The other thing that I think it closes the loop between these two paths, you talked about public perception, that 3% awareness you have to have before you get the shift in collective consciousness. If it becomes not just a distractedly denied actual policy, which it is to inflate away our currency as we've been seeing since 1913, but if it becomes a clearly stated and platform policy that, don't worry, we're just going to, the official policy is now we're just going to print away any debt and pay it off that way, then it will become clear to enough percentage of the people that the currency is no longer what we thought it was when we were children or whatever, that it is just funny money to be not to be trusted. And so I think that would drive behavior away into storing value or the fruits of your labor in other things, not in currency. That's for sure.
Right. And, and the other part about it is central banks target an inflation level, typically, and in this country, 2%, yeah. Because that way you're losing your value at 2%, but you don't really complain about it because it happens kind of slowly. Yeah. However, since this has not been effective enough in creating the inflation levels that the governments want, they're actually, we are also likely to see price targeting. I want that banana to cost $20, and you have to buy that banana because you got to eat bananas. Okay, well, will that get their inflation level up to where they want? Sure. But then the question is, do you really think that central banks can control it? I mean, they can until they can't. But if you start targeting prices, and you watch, they're going to do it really slowly to kind of get you used to it and to kind of test things. But that's where they're going with it. They need people to spend more money. But if they're not making more money, they can't spend more money. It's not going to, that's the whole thing about inflation. If you have wage inflation, the debt that you took on, the mortgage that you took on 10 years ago is easier to pay today if I get more of those fiat dollars to pay it. So therefore, I can take on debt. And going back to the theory, and actually this is a lot of what governments think too, if they can just create enough inflation to service the old debt and to enable people and corporations to take on new debt, then they can inflate themselves out of the circumstance. but they never get rid of that debt. So the debt just keeps compounding, and the interest keeps compounding. So much so that within a few years, the CBO, Congressional Budget Office, expects the interest on the debt to be the largest line item beneath Medicare, Social Security, and defense spending. They expect interest payments to be above all of that. Right now, those are ahead of the interest payments.
Based on what has happened to hide other things, like when you buy a product and they're supposed to list the ingredients in order of actual presence in the product, and you look and you say, oh, this can't be too bad because sugar isn't the first ingredient or whatever, and then you look down and you see there's fructose, and then there's corn syrup, and there's high fructose corn syrup, and then there's sugar, and there's different, that they've just spread it out so that it falls down the list. And we've seen that you look at your W-2 pay stub that you bring home at the end of the pay period, and you don't just see taxes as this big block item at the top. You see, the federal tax and the FICA tax, and then the Medicare tax, and then the state tax and the local tax, and then whatever. There's ways to hide things even when they're in plain sight. So
absolutely. And then you go out and you shop and you pay more tax on what you shop. And then for all of these licenses to do all of this, there's taxes on top of that. And I'm sure at some point we're going to get a VAT tax, value added tax, so that you're taxed. So, we're not taxed in one place. We're taxed all over the place. And like you said, it's hiding in plain sight. And, we had a tea party, but somehow we just seem to accept this. And it is really, I think it's abusive.
it is, and it's our lifeblood. It's people's lives that they're exchanging for this. You go and you pour your life's work out, and then you look,
Right.
and the largest part of that is going to pay for taxes that you have. It seems no oversight on, and that
Right.
you're being distracted from. You've already addressed part of this, but Nathan Glidewell asked, does she believe we still will see a melt up?
I think, it's really interesting because the answer to that is yes, it makes a whole lot of sense. And since global central banks have shifted their position and basically told you that we're going to make sure the banks have all the liquidity that they need, I do think so. Where you hear any hesitation, and especially with all the new IPOs and all the unicorns, they're going to want to keep that going to extract as much wealth out of the market as possible. But I would have. It's really hard because we've got the Brexit, and we've got the trade wars, and we've got so many other things that are coming in. So the answer is, yes, I would expect this to be the final melt up, but maybe we already had that going into 2018. I can't say for sure, except I would expect the central banks to be pumping a whole lot more money into this system. So we'll see. And I would like to add something else to that, because I know that a lot of people go, well, I might as well buy the stock market if she thinks it's going up. But my concern is your ability to get out when you want to. Mm-hmm. That is my biggest concern. So I'm not playing that game personally. I'm not. I don't have time to watch it like that, and I'm not a trader. I'm not a gambler.
There's a question from S. Ed that asks, will anything change once the gold becomes Tier 1 asset at the end of March?
Well, actually, okay, so that's what people have been talking about, except gold has been listed. I'm going to be looking at Basel III between, before I do the Q&A next Tuesday, to be perfectly honest with you, because apparently something is happening, and I think it must be with gold, except gold was listed as a Tier 1 asset for a long time. So, can you listen to Q&A next Tuesday, and I'll have the answer on that one? And Megan, make sure that you write that down so I can. Okay, so I'm going to do a whole thing on Basel III next week.
Very good. And we've spoken about several things, including silver and gold. Political Prisoner 2 asks, can Lynette give us an update on the palladium market and the possibility of that market going ballistic? We've heard that Russians are not going to supply palladium to Western markets now.
Well, it's the thing, palladium is an industrial metal. And my focus personally is really on the monetary metals, not just the precious metals, because palladium is also a precious metal.
Mm-hmm.
I think, and they use a lot of palladium in automobiles and that kind of thing. And the auto industry appears to have peaked, and that means sales are dropping. So Russia is arguably the resource capital of the world, not just for palladium, but also for platinum and for many other things. And, they've been tired of kind of kowtowing to us for a long time. So will palladium go up? Well, if we're now in a melt up, everything's going to go up in terms of fiat, but demand, because we've already hit peak autos. We're seeing defaults rise. We're seeing, the prices of cars have gone up dramatically, so the affordability factor isn't there anymore. So the market that uses a lot of palladium is on the downside.
One last question here before we get a chance for you to tell us more about your work. A Cyclone Steve asks, what signs will tell us it's time to abandon our former life and head for the hills, and or what signs will we need to see that it's too late in the game to make a move?
Okay, well, we are seeing all of those signs, and I've been seeing those signs for a long time. Whenever you hear me talk about pattern shifts, like a massive insider buying or selling of their stock, because who knows more about the company than those that run it? And we've been watching that now for about a year and a half, where we've seen massive spikes in insiders selling. That's very telling. Why are you buying if they're selling? It doesn't make any logical sense at all. So you always want to look at what the smartest guys in the room are doing for themselves. The fact that central banks have expanded their gold purchases, I think at 77% year over year, and that more and more central banks that weren't buying gold are now accumulating gold as quickly as they can. I think that is a huge sign that you should be following what they're doing and getting your own position ready. And of course, if you can change something on a dime, then it probably, a real fast turnaround, then you might have a little more time. But for me, in order to be as independent and self-sufficient as we're going through this reset, and even right now, I saw grapefruits at the grocery store at $2 for a grapefruit. Well, this came off my tree. So, how much money do you want to spend on food that somebody else has grown that you don't really know what the water is or anything? And I'm not saying everybody should be a farmer. I'm insane. I know it. And I'm lucky enough to have people that are actually, doing it for me, because I'm busy doing everything else. But this is where I hold my wealth, because no matter what happens to the dollar, I'm going to be able to eat that grapefruit, because I'm going to be able to pay my property taxes. I'm going to be able to pay the mortgage off during the reset, because I'm all properly positioned. So now is the time to get in position. When you're going to know it's too late? When you don't have any more choices. Think about 2008. I was following Lehman closely. That's my alma mater. That's where I went when I first became a stockbroker. I didn't know the day before, they're never going to let Lehman go out. Oh, no, that just can't happen. That's called a black swan event. It's an event that nobody anticipates. Nobody can believe that something like that could happen, so nobody's paying attention to it, and it happens. What choices did you have when the markets froze? 24 hours, done.
That's right.
It's too late. So now is the time. We are getting signal after signal after signal. Follow the smart money. Who knows more about money than central banks? And when it's too late, it's too late. You have no choices left. And I don't want to see anybody in that position.
I forgot to ask you this question. I was going to, because we were talking about the growing your own food, that sort of thing. Joshua Ginsburg asks, can you ask Lynette what she thinks of farmland as an investment, and also how does one protect their livestock and garden from hungry neighbors in a civil way, if possible?
Well, at this point, I think farmland, everybody's got to have a place to make their last stand, right? So that's a big part of it. I've chosen to make my last stand and created an urban farm on my property, but I would not go out at this point and buy farmland because it's overvalued.
Right.
And there's a lot of bankruptcies happening. So if it's about a quote unquote investment, well, you'd be buying high. I wouldn't touch it. But if you haven't built your position yet, I mean, you've got to have a roof over your head, and you've got to be able to feed yourself in some way. And there's lots of different ways to do it besides growing your own, or depending upon the space that you have to do it, you could actually grow a lot using an aquaponic system, so fish, to create your fertilizer. And you can grow a lot of food in what's just a normal stand. But I think that's critically important. So I wouldn't touch farmland right now as an investment.
Right.
But if you need to put a roof over your head and you feel like you can work the farm, rock and roll hoochie coo, and then there are different animals that you can put in different places to help alert you. I think geese or the mongooses, they are very territorial. So I don't have any because I'm in the middle of the city. But if you station them in the corners of your property, they're going to alert you to any issues. But that's also where community comes in, isn't it? I feel like the work that I've been doing on my property, so much of that is about community. And just like I said, I have a lot of help. I don't have time to go out. I like to, and I got to harvest. I love to go out and do that, but I don't really have time to do that day-to-day stuff. So it's not just from the people that I'm, paying fiat to do it, but also the neighborhood that comes by and picks a grapefruit or whatever. That's a lot of community, because I feel as if they will help defend the property, knowing that they can come and get food for their family there. We'll see what happens in reality, but that's my hope.
Yeah, that echoes some sentiment that we've heard shared from some other guests, is that absolute essential nature of building community relationships, a network with like-minded folks around you who have good, and building up that goodwill, as you mentioned now, with the idea that you'll be able to draw on that in the future.
I would like to say they might not even be like-minded, okay, because I don't really talk to my neighbors about this, so I don't even know if they're like-minded or not like-minded. I know I used to get a lot of hard time about what I was doing because it was so unique to the neighborhood, but that's still developing the community, just being friendly, just being open and offering. And I think it's people that are not like-minded that are going to need us more than those, because if you're like-minded, you're preparing. If you're not thinking about it, you're not doing anything, and therefore you're more vulnerable. Those could be even better allies once the poopy hits the fan.
Well, Lynette, we've got more questions, but we don't have more time, so we wanted to give you a chance just to remind people what resources and help you can provide them if they reach out to you.
Absolutely. Well, ITM Trading is a full-service physical precious metals brokerage house. So unless you were to do anything inside of an IRA, which is not what I've chosen to do, but everybody's got to do what they're comfortable with, you are going to take physical possession of the metals. And we believe very strongly that it's simple. If you don't hold it, you don't own it. And so what I've done is based on my studies since '87 on currencies and currency life cycles. I've developed a strategy for myself just based upon those repeatable patterns. And that's what we really love to do here, is we love to work with clients, establishing what their goals are, and then helping them build the structure that's going to support their goals. We're creating our own little community. So, of course, we've got YouTube, and you can Google my name, or you can ITM Trading YouTube, and we produce research pieces. It's a team here. We all produce the research pieces a couple of times a week, and then the Q&As and the wonderful interviews with you. And you did great, Dunnigan. You did way better than I did when I had that.
Oh, man.
Bone broth.
Yeah, that's true.
Broth.
My wife's got me on that already. Yes.
Yep. That's a good thing. Moringa.
Oh, that's true.
Probably
That's
helps
what
too.
Dr. Jay Nielsen that we have on the show. He raises that tree down in his survival compound in Haiti. He brags on that for many different purposes. So.
Oh, moringa is one of the, you could live off of it if you needed to, and every bit of it is useful. And you can grow it. It likes hot. Yeah. But you can grow it anywhere. You would just have to do it like if you get snow and it gets below 32 degrees, you just need to do it in a pot so you can take it in and protect it in the winter. Well, everybody should have a moringa tree, and it grows like that. It's so easy to grow.
We've got to I'll try to see if we can get you and Dr. Nielsen on. You guys could be a panel talking about some of these permaculture ideas, because I think you both have some real hands-on experience at that.
I'd love to do that, but a lot of what I've tried to plant are the superfoods, because it's also a way to, not only is it healthy for you, but since so much of what I'm doing is about sharing, I can feed more people. Because if you eat really nutritious food, you don't have to eat as much, because your body's getting the nutrition that it needs.
That beats what a lot of us have stored as survival food is not always the most nutritious. So it's great to know how to select those very nutritious, fresh sources that you can cultivate in limited space. We've been speaking with Lynette Zang, the Chief Market Analyst at ITM Trading. Lynette, it's always a pleasure having you here on Reluctant Preppers, and thank you for joining us again this time.
Oh, it's my pleasure, Dunnigan, and I hope you feel better.
Thank you, me too.
Bye-bye.
Bye-bye. Hey, Reluctant Preppers. If you haven't heard, we've already started our monthly 1-ounce U.S. Silver Eagle thank you gift to one active Patreon subscriber each month, signed by your host, Dunnigan Kaiser. And you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.